Hello everyone, this is your swing trading stock market outlook for the week of April 3rd. Note that it is a shortened trading week. There will be no trading on Friday as the market is closed. So looking at a 4-day week. I go through the same process every week. I look at the overall state of the market. That determines whether I want to be even placing trades or not. From there, I can go into whether I want to, if it's good, then I can look at individual trades and then patterns and trade triggers within those. In this video, we're going to look at overall health indicators, recent watch list performance, and sector performance. You can see some trades or stocks that I'm potentially watching if this market continues to improve, to potentially take some long trades in. This one, the best swing trading stocks list, has been recently updated, so we can put for March there in that title. And it also has some stocks that are very weak. So even if the market stays weak, there could be some potential short trades in there if you are into doing that. Look at the major indices in terms of price action. So the S&P or the Nasdaq, mostly technology stocks, large cap. NYSE, a very broad measure of overall stock market health because it includes everything that's listed on the Nasdaq, wide range of company sizes, industries. S&P 500 is large cap U.S. stocks. Russell 2000 is small companies, U.S. based. And the TSX Canada Index, a lot of energy and mining companies, those types of things. And we can see all of these except for the Nasdaq. The Nasdaq is running higher. It is at a higher swing high relative to this last one, so it is in a confirmed uptrend at the moment. The NYSE made a lower swing low here, so it is not a confirmed uptrend. Russell 2000 made a lower swing low. It is not a confirmed uptrend. But at the same time, we did have these bigger runs that happened earlier on, so we could see still quite a bit of movement to the upside before we get to these prior highs. But at least at the moment, we're either in a downtrend or an expanding range, right? Because we had these, if we look at the NYSE, we had this high followed by this high, which was higher, this low, followed by this low, which was lower. So we're in this broadening type formation. My guess would be that this ultimately resumes to the upside, but that's just totally a guess. That's why we do this each week. Just to see where the market's at, and I will either push the pedal or hit the brakes depending on what the market's doing at this time or at that time. S&P 500 in a very marginal uptrend. We had this high here, we made a bit of progress above it, and we have pulled back. And I realized I have the futures up there instead of the S&P 500, but that's okay. And yeah, so marginal uptrend there, and we are moving pretty rapidly back toward those highs. The TSX, the Canada Index, also got right back to those lows, so not a confirmed uptrend. We're also in that either expanding range or potentially downtrending if we started to roll back over the downside. So we have a bit of a mixed bag out there. We have one index performing well. We have a couple that are not performing as well. We have one which is a marginal uptrend. So what does that tell us? It's not ideal out there. Not all these indexes are saying, hey, this is a great time right now. But at the same time, they're all moving up right now. They've all come off these lows and are accelerating to the upside. So at least for the short term, we're looking okay. But overall, we still don't know if this is an uptrend or if we're going to stall out in this area here and then roll back over. Same with all these indexes. Are we going to roll to new highs, or are we going to roll over to the downside? And when we're in an uptrend, I feel much more confident about saying, okay, we're making higher swing lows, higher swing highs. I'm going to assume that's going to continue. Right now, if we assume what's happening is going to continue, we either have the downtrend in play or we have this expanding range. So there's a little bit more ambiguity there, which just means I'm going to keep more of my capital in my pocket. I might deploy a bit of it, but not all of it. Oh, one other thing, the gold, we had this really strong run up. Same with Bitcoin, really strong run up. And we've just been moving sideways since. So we're in these ranges. Will be interesting to see which way we head out of those. Those are more just for interest's sake. The health indicators. So the top one is number of stocks above their 50-day moving average. And we can see we are moving up pretty quickly to the 50% line. This is 49% of S&P 500 stocks are above their 50-day moving average. So that's getting into good territory. You can see that these do generally trend pretty well. So once we start getting toward that this horizontal line, the 50, we do tend to usually go above it for a while. And it kind of goes in these big ebbs and flows. So we are on the upswing. That is good. And we aren't quite above that 50%. So we still have lots of stocks that are sitting below their 50-day. The 50-day moving average is just a very crude measure of short-term trend. So, it doesn't necessarily mean that all these would be perfect setups or anything. It just means, what's the average stock doing? Is it moving up or is it moving down? And when more than 50% of stocks are above their 50-day, it's going to be easier to make money on the long side than if, we're in a period where it's really low. Volume, not super important to me right now. This is just the daily percentage change in the S&P 500. Still very volatile. We're getting these big upside swings, big downside swings. This is not indicative of a long-term uptrend. When you see a long-term uptrend, and maybe next week I'll expand the chart out a bit so that we can see it, you're going to have lots of values like this area right in here where it's just tiny, small moves up and down. We don't get these big 2% drops, 2% rallies, 2% drops during major uptrends. It's mostly tiny movements, and then you get the odd one day or two that's a little bit bigger movement, but for the most part it's small. So this is still very volatile, more indicative of downtrending behavior. So that's not great. The NYSE advanced decline line, I've kind of cut it off just so I can zoom in here on the far right side. We had this swing high in the S&P, and we had this swing high in the NYSE advanced decline line, and the S&P has moved above that high point, and the NYSE is sitting just below it. So while it's had a nice strong rally, it's slightly weaker than the S&P 500 right now. That is not great. But we also, from looking at the other indexes earlier, we saw the NASDAQ quite weak. So there are a lot of stocks out there that are quite weak. So this is actually to be somewhat expected. But it just highlights that, again, it's not great out there. This is upside volume versus total volume. So when it's at, let's say, 90%, that means that 90% of the volume that day occurred in stocks that were moving to the upside. If we were to get a 10% level, that means only 10% of the volume for that day was in stocks moving to the upside. We've had some higher values here, but really we only care about 10% and below, or 90% and above, and we haven't had any of those recently. Last one was a 10% downside day on March 9th. So that just runs through those. And another thing that I look at is how have recent trades been working. Well, if you were in some technology stocks, they obviously did really well last week. But for the most part, I went through and updated the swing trading list last week, swing trading stocks watch list, and I didn't see a lot that really interested me. They were either kind of weak or because we'd had that really strong run, we had some stocks that had spiked up and they were no longer inside any patterns that I would trade. So nothing really setting up for me at the moment. If conditions continue to improve, I will keep scanning and those charts will start to show up and we'll hopefully get some trades. Sectors on the move: technology, consumer cyclicals, and communication services. Definitely the top ones. Energy was top over the last week, but it has been weak over the last 3 months and last month. Consumer cyclicals, technology, and communication services were the tops pretty much on all these three time frames. We have technology, communication services here, and community cyclicals all clustered up near the top on the 3 month, clustered up near the top on the 1 month. Communication services was weaker on the week, on a week that pretty much everything went up. But on sort of all three of these time frames, if you had to look at which ones are holding up the best, it would be these three. So what does that mean for my trading, well, yeah, until these improve just a little bit more, or I start seeing some, once they improve and I start seeing some, or until I see some swing trades that I want, I will be just hanging out on the sidelines and, of course, day trading the stocks or Forex, which provides a more steady stream of income, you could say, since we can trade every day, whereas the swing trading, as you can see, we have these periods where we can jump in and then we're out again, and that's just because of this overall market downtrend we've been in. 2022 was pretty much a down year, and we get these little pockets where we get some trades going long, and we had some pretty good stretch in here where I got to go long and took some trades and had some nice gains, but then we just went back to this downtrend, and now we're going to see if we can take off again and get a few more trades in. And then once this uptrend unfolds, hopefully we have 9-10 months out of the year where we can be taking long trades. But since we're still kind of grinding out of this downtrend, hasn't quite worked out that way. It's a lot more sitting on the sidelines than buying. So that is it for the market outlook this week. Have a great week out there and a good shortened trading week, long weekend.